The face of the Indian economy is undergoing fast and exciting changes. With digital transformation taking over, our lives have become more convenient and efficient. In this episode of The Third Empire, we will talk about a technology that has made commuting all the more easier. Instead of long waiting times and congestion, this technology has made commuting time-saving, convenient, and efficient, contributing to a better and more seamless driving experience. We will also talk about the Indian superhero of digital payments and how it has now reached a stage where cross-border payments are being integrated, looking at the emergence of this technology. Next, we will talk about how India's core sector is faring, which gives us an understanding and the functioning of the broader economy. Lastly, we talk about the recent developments with the decision taken by the Federal Reserve with its interest rate and how it has impacted the Indian economy. Let's begin. You're watching Informed Investor, The Third Empire, an initiative by Research and Ranking. From the application of digitization across different sectors and reducing human effort, making everyday chores easy and convenient, this advancement is being taken from your home onto the roads. If you're still guessing what we're talking about, this is about the FASTag technology that has been implemented at national highways across the country. FASTag is a system to facilitate electronic toll collection in India. It uses the RFID, which is the radio frequency identification technology, which eliminates human intervention in the toll collection system. It was introduced by the National Highway Authority of India to promote digital payments and reduce congestion at toll plaza. So how does it work? The FASTag slip is to be attached to the windscreen of your vehicle, which is linked to a prepaid account. Toll payments are made through the RFID technology as you drive through your vehicle through the toll gate, which means you do not have to stop at a toll plaza on your journey. Users can operate via UPI or the 23 banks governed by the NPCI. Once activated, every time the vehicle passes through a FASTag-enabled toll plaza, the money will get debited from your FASTag, eliminating any sort of human intervention and a contactless toll payment system. The FASTag has grown tremendously in volume. From fiscal year 21 to fiscal year 23, the FASTag saw a growth of 156%, indicating a seamless integration and openness to integrate and embrace new technologies. The fiscal year 23 saw issuances of 3,402 million FASTags, generating a total transaction value of a whopping 54,144 crore. The government's push towards a digital economy and a cashless transactions has also contributed to the growing popularity of FASTags. The implementation of FASTag system in India has been a resounding success with a consistent growth trajectory. On 29th April 2023, the daily toll collection through FASTag system achieved a historical milestone, reaching an all-time high collection of Rs 193.15 crore with 1.16 crore transactions recorded in a single day. Additionally, the number of toll plazas has also increased from 770 to 1,228, including 339 toll plazas. With the penetration rate of around 97% and over 6.9 crore FASTags issued to users, the system has significantly improved the user experience by reducing waiting time at NHV plazas. The consistent and progressive adoption of FASTags by highway users has not only enhanced efficiency of toll operations but also led to a more precise valuation of road assets, attracting further investment in India's highway infrastructure. In conclusion, the implementation of FASTags in India has been a resounding success. The digital payment system has now transformed the way people travel on highways, making it faster, easier, and more efficient. With the help of RFID technology, FASTags have eliminated the need for manual cash transactions, reducing congestion at toll plazas and saving valuable time for commuters. The government's push for mandatory adoption of FASTags has also encouraged more people to switch to digital payments, contributing to the overall vision of a cashless economy. The success of FASTags is a testament to the power of innovation and technology in transforming the way we live and work, and we can only expect more advancements like this in the future. The next story is about the world of digital payments, which has been turned on its head by the explosive growth of the unified payments interface in India. In recent years, UPI payments have shattered records and surpassed all expectations, transforming the way millions of people make transactions. Let's talk about the Indian superhero of digital payments, UPI. UPI is no stranger to an Indian. With its lightning fast transactions and user-friendly interface, UPI has revolutionized the way we exchange money, making it easier, faster, and more secure than ever before. UPI has made significant progress since its launch in 2016 and has emerged as India's favorite method of payment. UPI has been breaking records, registering more than 83 billion transactions in fiscal year 23, amounting to a whopping 127.67 trillion. And in fiscal year 22, it processed around 46 billion transactions, amounting to over rupees 84.18 trillion. Additionally, the rise in UPI transactions has been aided by the growth in digital lending, wherein lenders opt to disburse loans through the Unified Payments Interface platform. India's UPI is becoming globally attractive and has now enabled seamless cross-border transactions. This is lowering the cost of fund transfers and remittance payments. UPI payments have been integrated with several countries like Singapore, Australia, Canada, Hong Kong, Oman, Qatar, the US, Saudi Arabia, UAE, and the United Kingdom. Another announcement was that UPI payments facility will soon be extended to inbound foreign travelers from G20 countries for making payments. Eligible travelers would be issued prepaid payment instruments, wallets linked to UPI for making payments at merchant outlets. Additionally, India has signed a memorandum of understanding with 13 countries that want to adopt the UPI interface for digital payments. India is making big strides in the world of digitization and financial revolution. India is expected to become a nearly 50% non-cash economy as tools like UPI and credit cards are widely used for financial transactions. UPI alone is expected to reach $1 trillion by fiscal year 26. This growth could be further propelled in the case of continued government incentives and higher traction for UPI 2.0, 123 Lite, credit on UPI, and lastly, the central bank digital currency. India is leading the way in creating a non-cash economy and is outpacing many other emerging economies with the help of UPI. With billions of transactions processed and billions of dollars in value transferred, UPI has become a trailblazer in the world of digital finance, setting new benchmarks for the industry and revolutionizing the way we think about money. This is India's story of a financial revolution, and if you wish to know more, we have made a detailed video in our third empire about the history of UPI and the emergence of this technology by Merlin Susanna. Core sectors in index of the 8 most fundamental industrial sectors of the Indian economy, and it maps the volume of production in these industries, also indicating the functioning of the broader economy. Imagine the Indian economy is like a human body. The core sectors would be the vital organs. These sectors are responsible for producing the basic necessities that other industries rely on to function, like electricity, fertilizers, cement, steel, and raw materials. So if these sectors are booming, it's a good sign that the economy as a whole is healthy and growing. Think of it like a chain reaction. When the core sectors are doing well, it creates a ripple effect that stimulates growth in other industries, leading to a stronger overall GDP. For example, the oil sector is a function of demand. Cement and steel too are a function of demand. When there is a rise in production for these sectors, there is also an outcome of rise in the economic activity. The output of 8 infrastructure sectors registered a growth of 3.6% in March 2023. The output of the core sectors had increased by 7.2% in February 2023 and 4.8% in the year-ago month. The core sector's performance has fared despite challenges. However, the growth has halved to a 5-month low of 3.6% in March 2023. This is on the back of an unfavorable base effect. Also, the output of some of the sectors like electricity and cement have apparently been dampened by the unseasonal rains. They displayed a year-on-year contraction in March along with crude oil. At the same time, coal, fertilizers and steel displayed a healthy expansion in excess of 8% in the same month, which is an encouraging sign. Compared to the pre-COVID levels, core sector is up 11.3% in fiscal year 23. We see that in the face of persistent global challenges, India's economic activity, as measured by the core sector output, have fared quite well, though we see muted growth in some sectors. However, in the near term, the economic recovery in the country faces headwinds such as looming global slowdown, quick monetary tightening across the world, and the continued economic impact of the Russia-Ukraine war. With the weakening global and domestic demand, India ratings believe that the growth in the infrastructure industries would be under pressure in the ongoing fiscal year. In the long term, however, we continue to be optimistic as government's aggressive capital expenditure investments, which will likely boost the core sector growth. Easing global commodity prices should also partially relieve the pressure on input prices. What does the recent Fed rate hike mean for the Indian economy? The Federal Reserve increased its key interest rate by a quarter of percentage points on Wednesday in order to tackle inflation. This is the 10th consecutive increase since last March, making it the most aggressive rate hiking regime since the 1980s. It is apparent that the Federal Reserve has persisted in its efforts to curb inflation. Although inflation in the US has declined to 5% in March after reaching a peak of 9.1% in June, it is still higher than the Fed's target inflation rate of 2%. Higher interest rates can slow economic activity by making borrowing money more expensive for businesses and consumers, which can help reduce inflation. Despite concerns raised by some economists that further rate hikes might lead to a recession, the Fed has continued with its current policy. Over the weekend, First Republic Bank failed, making it the third bank failure since March, which has caused concerns in the financial markets. Nevertheless, the Federal Open Market Committee believes that the US banking system is sound and resilient. Fed Chair Jerome Powell reassured reporters that the banking industry had improved since the last failure. On future hikes, the Fed Chair didn't give any guidance as to what the next move from the Fed will be or an all-clear signal. They will need confirmation from the data that the stance of monetary policy is sufficiently restrictive. We see that the future policy decisions likely won't be as clear-cut, and the Fed is keeping its option open for now. That confirmation will eventually take the form of slower inflation, weaker job growth, and weaker lending activity from the banking sector. How did it impact the Indian market and the economy? The US Federal Reserve's policy decisions have a ripple effect across the globe, and a hint of rate hike trajectory can shake up the markets. Coming to India this year, so far, the Indian market has reacted both ways after the Fed's outcome. The Federal Reserve's decision to raise its key interest rate for the 10th time also had a positive impact on the Indian markets and the economy. The Sensex rallied up to 187 points, while Nifty crossed the 18,140 mark, reflecting investor confidence in the strength of the Indian economy. In fact, India's market closed at the highest in nearly 5 months, even as the US Federal Reserve raised interest rates by 25 basis points. This is on the back of continued buying by the foreign institutional investors and the strength of the rupee that have imparted strength to the Indian market, leading to a bullish trend. Positive quarterly earnings and healthy macroeconomic data further kept investor sentiment buoyant. India's economic indicators such as PMI, GST collection do reflect a resilient economy. PMI has been above 50 for 22 straight months. A print above 50 signals expansion. Likewise, the GST collections in April was the highest monthly mop-up since the scheme was rolled out. Moreover, the sharp decline in crude prices and dollar index is an added bonus for the macroeconomy. All of these factors have led to some resilience in the Indian markets. This is our attempt to bring you some news that matters. With that, this is Rahul Hassan wishing you and your loved ones the very best.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.